I'm glad to say that Peter Dixon is here with me in the studio from Commerzbank. Good morning. If we just take a look at these jobs data, everybody seems to think they're going to be off just a little bit. Is it actually going to show us when? Is it going to give us a better indication as to when QE2 is likely to be introduced in the US?
Well, I think there are a couple of aspects to look at in these employment numbers. As you said, the headline figure likely to be off, and I think that will probably persuade the doves on the FOMC that maybe the time is nigh for an extension of asset purchases. But of course, the positive side of this is that the US is actually creating jobs in the private sector. The numbers are expected to be up by around 75,000. So there is some good news out there, but as your correspondent earlier was saying, that's not enough to prevent the unemployment rate from ticking up, and that's the thing which the Fed worries about.
There is the question, isn't there, that good figures from Alcoa, good figures from in this earnings season might be likely to actually do more to stimulate the economy than QE. I mean, we've already got such low interest rates. How much, in terms of the actual practical, real economy, does QE mean that more people will be hired?
I'm not convinced it will be, at least not for an awful long time to come. I mean, basically, the way QE works is the central bank pumps a huge amount of liquidity into the banking system then lends that into the wider economy, that creates output and creates jobs. Great theory. The practice is, of course, that the banking sector isn't lending that money which is being given to it. And until that problem is remedied, I rather suspect QE will not have the impact which central bankers desire.
Now, we're also seeing the US dollar lower today. Overall, this is going to be better for US exports, isn't it? Do you think this trend is likely to continue?
Well, it will certainly help US exporters. Of course, what we really want to see is a pickup in demand around the world. But, will the trend continue? I suspect it probably will. I mean, as the Fed engages in quantitative easing, that's likely to put downward pressure on the dollar, which I guess many US exporters will be very happy about. But, of course, many other governments and central banks around will be far less impressed.
Indeed. I mean, just coming on to this, the currency wars is getting an awful lot of play at the moment. How concerned should we be about this?
Well, I think when the IMF turns up and says, well, there is an issue to be concerned about here, I think we should be concerned. I don't actually think this is going to break out into an all-out currency war, but I think an awful lot of sabre-rattling on the part of the Chinese, the Europeans, various other countries as well. And there's certainly an element of central banks doing their very best to try and push currencies down. It may be inadvertent in the case of quantitative easing. It may be an explicit measure, as the Swiss have recently done, but either way, central banks are certainly playing a big role here.
Now, it does highlight this issue of global economic imbalances. Just explain to us, if you can, just why that matters.
Well, the question is, does it matter? I mean, there's a positive and a negative aspect. I mean, the negative aspect, of course, is that the funds which have been created, the liquidity which has been created in the Asian markets help to boost asset bubbles. Well, that's certainly a negative factor. The positive factor is, of course, that the huge amount of funds, the liquidity which is being generated in Asian markets is going to help to bail out the huge US deficit. So they're helping to buy US bonds. So I would argue that whilst some reduction in these imbalances is necessary or desirable, I think US policymakers in particular should be careful how much of that reduction they wish for.
OK. Peter Dixon of Commerzbank, always a pleasure. Thank you very much for joining us today.